Hey, what's going on, YouTube? Got a question about the Nasdaq, and it's down today. What I'm looking at is a channel, and the reason why I put this line up here and not some other way is this line is touching three different spots, and we have a whipsaw, we have a bounce, and we have a bearish retracement. Look for previous low break down, and that's a monthly. So just to break it down a little bit more, here's a weekly. You got a bounce here, made a top, made his opposing point, bearish retraced, higher low, recovered, whipsawed, recovered, whipsawed again, and then it broke down. Nice reversal bar, and it recovered, making a higher low. And wait for a breakdown of basically 43, which is almost there. It's in a channel, so watch for a bounce into support. Could get very volatile down here, obviously, the wicks. Just to break it down just a little bit further, here's a double top on the whipsaw, a bunch of bearish flags. We do have a higher low on the 5-hour. But as you can tell, it started to break in the previous lows and got knocked back. So we're well below on a 5-hour, below the 8 and the 13. We need a good closing above these resistance lines to see any kind of coordination with this higher low. Maybe even a previous high break, 43.71. But as it stands now, it looks to be after a breakdown, bearish retracement back to the 8, if it can get that high. But look for previous low breaks, 43.26, 43.19, off to the races to 43, which is the final straw, before it breaks down to the other side of the channel. So it looks bearish. It's below on a weekly, below the 8, 13, and the 34, as the 8 crossed and crossed below. So you got a whipsaw across the 34. Look for a bearish retracement and a breakdown. Now the other thing you want to pay attention to on Nasdaq is Apple and Google, and then only Intel, because they're laying off a whole bunch of workers this year. They're on schedule to be laying off people. The sentiment on Apple products is not a lot of people are going out to buy more and more Apple products at $600 a pop every other year, or even every year after the new thing comes out. So less and less people need the new products. Now they're sticking with the old products because there's not very much difference, blah, blah, blah. And a lot of these business models that come out with a new product every year, while everyone else has the old one, this business model is failing. Microsoft is the same thing. They're failing because they keep coming out with new operating systems, and everyone's like, I don't want a new operating system. What's wrong with the old one? So more and more people are not buying the new product because they already have last year's version and it works fine. So this business model is failing. I think I mentioned before the month close, this nasty candle on Apple. It closed way down, closed at support at 92.90. But if this breaks down, it'd be a hell of a short for anyone watching. And go down to 80. You got support at 87. You got support in this balance point. Once this wave breaks, it's going to go down. But after we go over this Google, same thing. It's cracking the 34 on a weekly. Balance point is at 680. If that breaks down, the wave is crashing and the universe will come out. But Intel as well, let's look at a weekly. You got a huge miss here. We got the natural points of return and then a huge miss, and then it breaks down. I call that double bearish. And this is in the same area where they started talking about layoffs. So a huge miss, double bearish on Intel. Just to look a long term. So the tech sector is not looking good according to these charts. Here we have it's just lingering on the 34. It could break down any second. An easy $2 to 28. Watch a break below 28. You got 1, 2, 3, 4, 5. Basically, the balance point of the wave is at 28. So look up below, a definite short below 28. So back to what I was talking about. I'm waiting for the Dow to break below previous lines of support, which was our lower highs. But this thing keeps bouncing. It looks bearish from here. Our lower highs are just barely lingering. I need this to whipsaw back the same as S&P did, as it whipsawed back. I believe S&P has more weight, so I'm waiting for the Dow to follow, and I believe the Dow will carry Nasdaq with it, or vice versa. Maybe the S&P breaks down and just takes everything with it. The other thing I'm looking at today is the dollar. It definitely broke down last night, but now it is creating this hammer, knocking out a bottom on a weekly. And you can see on a daily how nasty that 93 break was. It came all the way down below 92, and now it's still mid-morning, but it bounced pretty hard. Now I'm screaming a bearish retracement because it definitely broke down on a weekly, but it might be just all a planned scheme here. They might carry this thing out for a few more months back to the 96 area as this turns into a larger bearish retracement. So pay attention to that. Those are the reasons why I think that Nasdaq's going to be okay until it reaches the other side of the channel. But if Dow falls below like the S&P did, and you can see the bearish retracement on the S&P, boom, boom, boom. It's like a 1, 2, 3. You break down, bearish retraces, and then so you look for previous low breaks. 2046, it's right there. To break down any second. The Dow, I need this to come below support into the 17.2 area. So I got 500 points for the Dow. And I think that's all I'm waiting for, unless this is all just a head fake and the dollar is going to come back to the 96 during the election year. Bearish retrace, and the next president will have to bear the burden of a dying dollar. But as far as I can tell right now, on a weekly chart, it's only Tuesday, but that thing definitely broke down and came back up. It's not above 93, so I'm screaming bearish retracement until I see tomorrow or the next day's open. Is it up or down? If it breaks down the previous low, it can really catch speed and fill that wick and follow that wick down easily. So keep an eye on that. That's what I'm looking at. That's why the Nasdaq's just barely hanging on with a thread. I believe that the Dow needs to fall down, and watch the dollar as it bearish retraces either more or just breaks down. But last night was nasty. The dollar just fell from 93 all the way to 91. It is pretty dramatic. Anyways, that's where I'm at with Nasdaq. Watch Apple and Google, where they're like a third of all the Nasdaq. So you can gauge it pretty well with that. But it looks bearish to me, at least to the other side of the channel. So there you go. I hope I answered your question. That's Nasdaq in a nutshell.